Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Eddie Tofpik, Head of FX at ADMISI. Always a dedicated follower of fashion and obviously aware that it is Thanksgiving.
Yeah.
So for our viewers today, you've kindly brought on your special Thanksgiving tie.
This is a special Thanksgiving tie for this day only. That's it.
That's it. Well, it's fantastic. It looks great. It's cheered me up no end. And we're going to be, well, quite aptly looking at a couple of US dollar pairs, but we're going to start off with euro dollar on the charts. Had a bit of an uplift. Where are we going from here?
Well, it's interesting that we've actually now broken out of this channel, which has been running the market since September, basically, with the idea of a huge, bigger head and shoulders top, I think, has now been negated, though I've left the markings on there just in case. The indecision, that gravestone doji, which said, okay, this is not going to go any higher, it did come down, but the support that was generated by that old channel line is enough to cause it to go higher, potentially forming a bull flag. But the first thing you've got to look at is the 119.10 level, which is the old neckline. Now, we still haven't had a close above this recent 50% Fibonacci at 118.22. We closed actually on it. That's how accurate that is. We actually closed on it yesterday, within a tick or two, and so we now look and see we need two closes above that to confirm it as being now the bullish move, and the next resistance is 119.10. Once we're beyond that, then really you're looking well over 120, sort of 120.30 area, 120. It's just sub 120.50 to actually see a movement back up there to that sort of level. So it's actually quite an interesting action at the moment. But the 119 level, 119.10 level, and it's a dynamic level. It moves every day. That's the one to watch on the upside, and the two closes are 118. Otherwise, back down.
And for confirmation, because we are in the Thanksgiving holiday today, and volumes are going to be light, and maybe there'll be a bit of volatility.
Even tomorrow,
Do you have to take that into account? Maybe instead of 2 or 3 confirmations, maybe a couple more, just to
you could have the move by then.
Yeah.
You could have the move by then. So I'd look and say, look for 2 closes. Always look for 2 closes. It's, you know, keep a rule and keep it sort of steady.
Good stuff. Let's have a look at euro sterling. What's going on here?
The tail of sideways. This is an absolute example of third way of market. 90.20 resistance, 87.30 support. We've got a long moving average, which is at 87.86 as support nearby. We've got medium moving average at 89.55 as resistance nearby, and we are travelling between those 2 outlying levels and using those others as interim support and resistance levels as the market moves. So third state of markets is possible halfway hesitation still, or a double bottom. It's not clear. It's going sideways at the moment. The market's chosen to do that. And
just talk our viewers through the bearish shooting star that we've seen.
Yeah, you have an opening market, a big spike up, comes back down, actually closes underneath the previous level. You could, some call it inverted hammer as well, you could say, but I'd say it's more of a bearish shooting star, indicative usually of a bearish market, and we saw that immediately afterwards. 1, 2, 3, 4 days of lower lows. Then day before yesterday, it started to turn up again, and we're starting to move up again. But we've got resistance, as I say, 89.55, and then the major stuff's at 90.20.
And let's have a look at cable as well. Had an uplift yesterday. Well, sold off initially after the budget, but pushed higher, maybe more to do with dollar weakness. But from a technical point of view, we're above 133. Can it hold this ground?
Well, it's interesting because we're now, if you look at that chart there, yesterday was the first close above the 133.20 area that we've seen since the big move down at the end of September, going into October. So we're building potentially, though it's more towards a possible double bottom action. It's increasingly looking at. If we do have, then the target is just sort of like 136.25 area. But we need confirmation, and it hasn't done that. It had one tiny close above that 133.20 area, and then it just sort of like a little bit higher today, but it's come back down. It's not confirmed it, but it's increasingly looking more as if it's going to try on the upside at the moment. Higher highs, higher than the previous high, higher lows as well. It's not looking as if it's going to really try. All the other indicators are lagging ones, the moving averages, all of them pointing higher. It's generally looking higher.
And I mean, we've tested this level previously.
Yeah.
it would be the case there's probably quite a lot of resistance around
I think
here.
we're over most of it until we get to say 134.5. We've really managed to. I think what's happened today is it's tried a new high yesterday and managed surprisingly to close it ahead of Thanksgiving because it's a quiet market relatively. And today it's coming back to see where can I get some support for the next attempt higher. That's just a summation from the very, very recent action. It doesn't necessarily mean it will happen. But overall, it's got a big band of support between 130.50 and 133. And it's going to, if it comes down, it's going to find it hard to work its way through those. You know, the lows are all of them higher, going back to October. We're seeing lows which have gone initially sort of close to 130, then close to 130.50, and then over 130.50. And it's looking increasingly like it's trying to build up a pattern for the upside. But it's a slow slog.
Understood. Well, on that note, Eddie, thank you very much for joining us.
Thank you.